Hey everyone, it's Ben Hardy here, and in today's video, I'm going to be going over some updates for the used car market. Before we get into this video though, as always, you're going to save time and money the next time you purchase a car. Link to my car buying guide in the description down below. And then some of the information provided in today's video comes from Cox Automotive. Let's get into it. Let's start things off by going over the data points. So first off, used car values are down by about 1.6% in the first half of the month of November. That is down from the end of October. Now that is a seasonally adjusted number, but it's still pretty big. And when you look at the year over year price change, it's negative 6.9%. So that is a big loss in the overall valuation of the used car market. Now, if you actually look at the graph of what has happened with used car prices over the last couple of years, it looks very similar to what you see in the stock market during a recession. So, we had the peak of used car prices in 2021, and then, prices came down and they continued to kind of go down into 2022, and then they started rising back up. And then now in 2023, they've started to go back down again. So it's kind of like what people call like the dead cat bounce, right? Or a bull run before things get worse. It really does, look similar to what you might see in the stock market. And so, yeah, it's potentially very telling of what's to come in the future. We'll talk about that towards the end of the video. Now, the next few numbers that are pretty interesting are what's happening at auction. So the MMR retention, the average price indifference relative to current MMR values was 98.8%. So again, this shows a weakness in used cars. And then the sales conversion is 52.8%, which is actually a little bit above what we saw prior to the pandemic. But you have to remember, when you compare pre-pandemic to post-pandemic numbers, there could be some correlation with, what's happening in the market now versus then, but also there's so much craziness that happened that it might not mean anything. Now, the next thing is the different segments of vehicles. Compact cars are down by 10.7%. That is crazy. I didn't actually expect them to be down that much. Luxury, 6.1%. Mid-size cars, 8%. By the way, this is year-over-year changes. Pickup trucks, 4.2%. SUVs, CUVs, 4.8%. Vans, 5%. And then the total is 5.3%. And that is an adjusted number year-over-year. The 6.9% is unadjusted year over year, for those of you that are wondering. And so let's kind of talk about what all of this data actually means for the used car market moving forward. So first off, cars are still selling relatively well at auction. Again, if you look at the numbers historically, but what's happening is it seems like dealers and other parties that sell cars at auction are more willing to reduce the price of those cars, or basically just gonna take lower amounts for those cars just to get rid of them. And this is anecdotal, but I have heard a lot of talk from dealers about just trying to get rid of inventory because they've just been sitting on it for too long. And so it makes sense as to why you'd have a higher sales conversion rate but still have the prices go down, because basically you have parties that are willing to buy the cars at the right price, and then you have the parties selling the cars that are willing to discount them because they just want to get rid of them. They just want to take the loss on the cars now and move on, rather than taking a bigger loss in the future if they continue to wait to sell the car, again, with the losses that we've seen in the used car market. And then if we look at the different segments within the used car market, I think that's pretty fascinating because, earlier we saw that there was a big decline in luxury car values in the used car market, and now it's switched over to compact cars, which I find very interesting because the market is still focused on more affordable cars, but it shows that demand is starting to wane, and there's actually more demand for luxury cars again. So the luxury buyers, again, they're not like flying into the market, but there are more luxury buyers. And I think what's happening, again, this is just based on my personal take on this, is I think that luxury buyers are starting to look at some of the new prices that are available on luxury cars post price declines, and they're going, well, still kind of high, but it's a lot better than it used to be. I mean, the one that everyone always talks about is the Mercedes G-Wagon, because that one saw huge price declines in the used car market over the course of the 2022 sales year and 2023 sales year. I mean, G-Wagons literally went from being $300,000 for a G63 down to sub $200,000 over the course of just a few months. And so you can imagine that, you know, someone that might have been willing to pay a higher price for these luxury cars, seeing them now at these much lower valuations going, hey, that makes sense, right? They've got the money for it, right? If the car's already gone down by, you know, some of these luxury cars have gone down by 20, 30, 40, 50%, you know, they might go down more, but yeah, that's kind of, I think that partially explains that. I don't want to spend too much time on that part of the market because it's a smaller segment of the market. But with the more affordable cars not selling, that does concern me personally for the overall health of the market, because that shows that the large majority of what the market consists of, regular people, are becoming tapped out of buying cars, right? If compact cars aren't selling, if SUVs and CUVs aren't selling as well, that is extremely troubling because those are your volume cars for the market. And so, yeah, that just shows some overall weakness. And so I think that we need to pay a lot of attention to those segments moving forward, because if we continue to see big price declines and big demand declines with these cars, what that shows is that the overall market is just not in a good state whatsoever, because the average consumer that's looking for the average car cannot afford that anymore. And so that could indicate much bigger price declines coming in the future. And you know, that'll kind of ripple throughout the rest of the car market. Now, the last segment that I'm going to focus on before we cap off this video is the pickup truck market. So used pickup trucks have consistently had the lowest depreciation in the used car market. I mean, there was a point where they were up year over year in terms of values, whereas the rest of the used car market was down. And they still are really low in terms of the amount that they've gone down in value. And this really does hit home the point of the fact that new trucks are just way too expensive. Like, the only reason why the used truck market has held so strong for so long is because new trucks are so expensive, they're so unaffordable that everyone's just diving in and buying the used trucks because that's all that makes sense at this point. And so unless we see like massive discounts on new trucks in the future, like much bigger than what we're seeing right now, I'm talking like we're seeing on some trucks, you know, $10,000 plus off MSRP. We're probably gonna have to wait until we see like $20,000 off MSRP. If it ever happens, I'm not saying that's gonna happen, but if that did happen, I think that's what would finally be the, you know, metaphorical straw that would break the camel's back with the used truck market, where we'd finally see a little bit of softening with those used truck values, because then people would be like, okay, the discount's big enough on a new truck for me to finally justify buying a new truck. And so, yeah, interesting with that thing. Anyways, let me know what you guys think about the overall situation with the used car market. Do you think that we're going to see bigger declines moving forward? My personal take on this, and this is just based on what I'm seeing in the car market and then also what I'm seeing in the housing market, because again, they aren't perfectly correlated, right? They're two separate markets, but at the same time, they're both, you know, well, houses are more of an asset than cars, but we'll just say they're both assets in quotations that people take out loans on. And so typically if one of those markets is suffering, the other one is also typically suffering. And I'm seeing a lot of weakness within the housing market. I'm not an expert in that market, but I'm just noticing huge price cuts on houses and more houses popping up on the market, staying in the market for longer. And so, yeah, I think that we could see much bigger declines within the car market based on what's also happening over in the housing market. I'll see you.